Hello, this is Matthew, and I welcome you to another episode of Unrewarded Intelligence, the channel that offers you free information about expensive matters. This week, we have Bitcoin at $29,436, $1 is 3,397 sats, and Ethereum at $1,745.25. The U.S. market observed light flows all week with modest two-way interest in BTC and ETH. The rally in BTC early in the week did not inspire conviction. Others dabbled in the ADA rally and inquired on QNT and DOT. The Asia coverage saw volume pick up in the latter half of the week and likewise observed little movement off the heels of BTC pushing above $32,000 early on. After last week's lackluster performance, network activity grew across the board this week. Specifically, active addresses grew by plus 3%, new addresses by plus 2%, transaction count by plus 2.5%, daily active supply by plus 10%, and monthly active supply by plus 1%. The network's market value rose this week, breaking an 8-week trend. Bitcoin's market cap increased by plus 2% week over week to $574 billion. More notably, average transaction fees, a measurement of network demand, fell by minus 5.1%. After BTC's hash rate corrected by minus 4.2% last week, the metric grew plus 1.2% week over week to 211 exahash per second. Moreover, Miner market capitalization increased by plus 2.1% to $132 billion, pacing ahead of the plus 2% gain in market capitalization. Because prices grew less than Miner market capitalization, miners may have increased their holdings. Bitcoin's Miner Outflow to Miner Revenue, MOMR, corroborates this sentiment. The metric saw a minus 5.6% decrease, suggesting that miner optimism may be rising as they are holding more coins than they are offloading. Now let's start with news of the world. According to a report from Bloomberg Law, the Biden administration is crafting policy recommendations aimed at lessening the energy consumption and emissions footprint of Bitcoin and other proof-of-work cryptocurrencies. The publication said it spoke to the Principal Assistant Director for Energy for the White House Office of Science and Technology Policy, Costa Samaras, who offered some insight into the impending policy attempts. Samaras said, "It's important, if this is going to be part of our financial system in any meaningful way, that it's developed responsibly and minimizes total emissions. When we think about digital assets, it has to be a climate and energy conversation." The New York State Senate passed a bill targeting proof-of-work mining to address some of crypto's environmental concerns. The bill, passed by the state assembly last month, would impose a 2-year moratorium on new proof-of-work mining projects powered by carbon-based fuel in the Empire State, though existing mining firms or ones currently undergoing the permit renewal process would be allowed to continue operations. The Senate voted 36 to 27 in favor of the bill. According to the bill's Democratic sponsor, State Senator Kevin Parker of Brooklyn, there is only one such plan in current operation that wouldn't be affected by the bill. Oman's sovereign wealth fund, Oman Investment Authority, took an equity stake in Denver-based mining firm Crusoe to help fossil fuel producers reduce gas flaring by using stranded natural gas to power crypto mining instead. Crusoe will open an office in Muscat, Oman, to help deploy power generators and mining equipment for capturing gas at well sites. The Middle East and North Africa (MENA) account for approximately 38% of the world's flaring or the burning of excess natural gas from oil fields. CEO Chase Lockmiller said, "We've always felt it was important for us to have a presence in the MENA region, given its share of global flaring," adding, "Having the buy-in from nations that are actively trying to solve the flaring issues is what we are looking for." Japan's parliament passed a bill to ban the issuance of stablecoins by non-banking institutions on June 3. Institutions that are not licensed banks, registered money transfer agents, or trust companies are considered non-banking institutions. Banking institutions must now use a registration system to issue stablecoins and provide measures against money laundering. The goal of the bill is to protect investors and financial systems from risks associated with the adoption of stablecoins. The stablecoin market in Japan is now valued at 1 trillion yen or $20 billion. Japan's Financial Services Agency is planning to issue additional stablecoin regulations in the coming months. The U.S. Securities and Exchange Commission rejected an ETF application for the One River carbon-neutral Bitcoin Trust. One River Asset Management applied for the ETF in May 2021, after which the SEC delayed its decision until this final deadline. The ETF proposal differs from others by pledging to purchase carbon credits covering the estimated carbon emissions associated with the Bitcoin held by the fund. The SEC determined that the proposal lacks sufficient investor protections, similar to comments shared by the agency in denying past bought Bitcoin ETF applications. Bitcoin's Lightning Network, a Layer 2 solution introduced in 2018 to help scale Bitcoin's transaction throughput, achieved an all-time high capacity of 3,915.8 Bitcoins. Lightning Network capacity has nearly tripled over the last year. Broader adoption trends, including the number of channels and nodes, continue to move higher. Kraken recently announced instant funding support for Bitcoin via the Lightning Network. Kenya's largest electricity producer plans to deliver excess geothermal energy to Bitcoin miners. Geothermal energy in the region is estimated to be above 14,000 megawatts, with 10,000 megawatts located along the Rift Valley circuit. Over 80% of KenGen's power is renewable energy, but it does not openly disclose excess capacity. Nasdaq-listed Bitcoin miner Bitfarms mined a total of 431 Bitcoins valued at $16.6 million and deposited 429 Bitcoins into custody, 99%, in May. The miner now holds 6,075 BTC, currently valued at over $192.5 million. All US-based Bitcoin futures ETFs saw trading volume fall week over week, except BTF, which saw a more than plus 146% rise. BIT's volume fell the most at minus 86%, followed by XBTF, minus 70%, and BITO, minus 37%. While BITO and BTF trade at par with their NAV, XBTF trades at a slight premium of 0.14% and BITS trades at a discount to NAV of minus 0.1%. The ETF saw AUM rise, except BTF, which saw its AUM fall by nearly minus 5% week over week. BITO's AUM grew the most at plus 6%, followed by BITS, plus 3.5%, and XBTF, plus 3%. Meanwhile, in the decentralized finance universe and NFTs, Hang Seng Index's company launched a new metaverse index, which will display the performance of Chinese companies that are involved in the metaverse business. Hang Seng Index's company considers the metaverse a megatrend, or a trend that will increasingly have a significant impact on the daily life of an average person. Tim Bako, one of Ethereum's core developers, announced this week that Ethereum's longest-lived proof-of-work testnet, Ropson, is transitioning from proof-of-work to proof-of-stake. A new beacon chain launched May 30th for Ropson, and the merge is expected June 8th. The merge on Ethereum's mainnet is currently slated for the third quarter to fourth quarter of 2022, but a hard date has not been set. Cardano saw an uptick this week in market cap dominance as the network prepares for its Basel hard fork. The hard fork is expected to bring improvements to Cardano's scalability with improvements on network throughput, latency, and block size, and will introduce diffusion pipelining, improving block propagation time. The hard fork will also bring improvements to Cardano's smart contract programming language, Plutus. This is all for today. The text version is in the description. Thank you for supporting our channel. Use this information wisely, stay sharp and illuminated. If you enjoy this session, please support our channel by clicking like and subscribe, and we will keep you updated with the news.